What is going on, everybody? This your boy Vlad coming with video number 5. Guys, this right here is like my bread and butter. This is like one of my favorite strategy that I like to use in the stock market. It is short selling. The reason why I have this article up, I also want to say short selling is actually one of the most dangerous strategies. So it's not really for beginners, but I did want to mention it because, like I said, these are the strategies that I use. So just trying to show you guys everything that I do. But short selling, like if you read this article, it says Tesla short seller lose more than 1.5 billion in one day as stock skyrocket on earning. All right, so you might be wondering, okay, Vlad, what is short selling? Short selling is the inverse of buying. So in the stock market, most people know buy low, sell high. So shorting is the reverse, because you could actually make money while the stock is going down. Most people think, oh, I could only make money, if the market is bad. If the stock market is bad, then I'm not going to be able to make money. That's actually the best time to make money in the stock market, when the market is going down. Because like I said, short selling is the inverse of buying. So you would sell high and buy low. So you're just reversing the order. So you would sell high and buy low. So essentially the steps of short selling is, let's say, and I'm going to give you an example, real life example of what I did. I want to say let me see the date that I made this trade. Let me find it. Okay, LEE. So I made this trade yesterday. As you could see, it has my entry. My entry, I sold it first at $2.63 and some change. And I bought it back at $2.12, And I made $532 that day. I think I was only in the trade for maybe, say, no more than 30 minutes to an hour. So I made like $532 in about an hour. So I short this stock, and let me break it down to you. So another example of what shorting is, you're pretty much getting a negative position. So what I mean by getting a negative position is you're borrowing shares. So in order for you to sell a share of a stock that you don't have, you have to borrow it from your broker. So your broker could be TD Ameritrade, E-Trade, or whatever other broker that you may want to use. So essentially what you're doing, you're borrowing the share from your broker. And when you borrow the share from your broker, you're selling it. So you're selling it in hopes of the stock is going to drop, so that way you could buy it back and give it back to your broker. So if I show you a diagram, not a diagram, but illustration of a drawing. This is the share. This is going to represent the piece of paper, and this right here is your broker. Bam bam, eyes, smiley face, boom. So put S for share. All right, so this is you. Boom boom boom. So this is your hands. Don't mind the drawing. But yeah, you're borrowing from your broker to sell it. So you're going to borrow it from your broker. Then once you get that share, you're going to sell it. You're going to sell it, or the proper term is you're going to short it. You're gonna short. You're gonna short it. You're gonna sell it to the market. So it's the same exact thing. So you would go here, and some brokers they may say sell, others may say short. So if you don't see anything with your broker that says short, then you just click the sell button. Click sell. Then let's say you want when you sell it, it'll do like this. Like I'm selling 1,000 shares at $2. So if I sell 1,000 shares at $2, the hopes of it is to buy it back. So let's say now I have, I sold it at $2, and now the stock is trading at $1.50. Then all I would do is just click here. You click buy, and the proper name for it would be cover. You're going to cover the short, but you would cover or buy back 1,000 shares at $1.66. So I would buy back 1,000 shares at $1.66, and you would just keep the difference in the profit. So with that example, it was $2. So it's $2,000. That's how much it cost you to short it, because you got 1,000 shares at $2. So that equals $2,000. So that was the dollar amount. Then when you bought it back at $1.66, that was, so you would just do the difference, and that's your profit. You made $340 because you bought it, you borrowed the share from your broker, you sold it in the market, and you bought it back low, and you kept the difference for yourself as the profit. So I hope that analogy, helps out. And if you need a little bit more understanding, please leave a comment below, and I'll answer your question. But yeah, so to break down this profit that I made, was the background behind this stock. It was up a ton. So it was up close to about 300%. So just because it's up 300%, that don't necessarily means automatic short. There's a little bit more to it. And like I said, this is just the introduction of shorting. It's really advanced strategy. So for beginners, I at least want you to know, that there's other ways to make money in the stock market. So the stock was ramping up 300%. I saw it started dipping back. Typically in the stock market, anytime a stock surges or, ramp up like in the hundreds percent, like 200, 300%, it normally have to come down. A prime example of this, I shorted this today, made another 500, was SINT. It surged. This was up like 200 some percent, and I was shorting at like the 280s. So I made like 500 something dollars with this too. So the thing is with penny stocks, the reason why shorting is so effective in penny stock is because a lot of the companies in the penny stock industry, they're pretty much running on fumes. They're gonna run out of business, so they have to do things to get money. So imagine if you have a company and your company's not producing any money. The only way that these companies, if you don't have a real product and you're not getting revenue, the only way that your business could stay in business is by money. So some of the stuff that these companies do is they issue out shares to investors, not regular investors, like big fat, the big cats in Wall Street, people who have deep pockets. And they do time to time, they do offerings of their company. And what an offering is just simply you're selling your shares at a discounted rate. Oh, the prime example of this, SQNS. Is it that? No, that's not it. Oh, there it is. SNCA. SNCA did one of the craziest offerings. And let me show you how it looks on a 5 minute. So this is the stock right here on this particular day. As you see, the stock is just surging up. It was at $1.33, and it ramped all the way to $4. So almost like 300% there. A little over 300%. And out of nowhere, when you see these little red candles right here, or the stock collapsing, it did an offering. So imagine that you're buying a stock at $4, and the company decided, hey, we're gonna do an offering. We're gonna sell our shares at a discounted rate to an investor. Let me show you the discount that they gave them. They gave them so they sold their shares to an investor for $1.23 when the stock was trading at $4. So imagine if you're on the other side of the coin and you're the investor, and you see a stock that is selling. The market value for the stock is at $4, but you're able to get the stock, and you're able to get millions of shares at a dollar. What was it? $1.23. First thing you're gonna do, and I don't care who you are, you're gonna sell that puppy. You're gonna sell it. So that causes selling pressure, and a lot of time, most people in the stock market, like I think this is the statistics, is 90% of the people in the stock market are buying, and 10% of the people in the stock market are shorting. So with this run up, you have 90% of the people buying, and 10 people of the in the market that are short selling. So the buyers, in order for them to get out the stock when they see this big death drop, they're gonna sell their shares. So every time they sell their shares, keep getting lower, keep getting lower, keep getting lower, keep getting lower, keep getting lower. So that's how short sellers benefit from it. But like I said, this is more an advanced tactic. There's more to it than just stock is up 300%. I'm gonna automatically short. There's fundamental analysis as well as technical analysis that you have to do as well, just to be able to do it. But like I said, this is just a beginner course, just getting your feet wet to understand a little bit more stuff about the stock market. So 90%, probably 80% of the stocks that jump up, probably even the numbers higher than that, they're gonna fall, because the reason why they're trading in penny stock land is because the company itself is not producing. So that's why you don't see Apple, Tesla, trading at $1, $2, $4, $5, because they actually have a real product and they're actually making money. So yeah, so this was just the introduction to short selling. The last thing I do want to show you, just show you my stats between buying and selling. Now I do more buying than I do selling, but my most profitable as far as percentage wise, it is shorting. And we're gonna run the numbers here with my stats. And if you were looking at this on another day, this right here should be updated because I do have other trades that I have to post. So let's see the stats behind it. I see my stats. Few more stats. All right, there it goes. All right. So long trades. This is considered the trades that I buy. Gross profit from buying, I made 9,851. My gross loss is $4,050. So that leaves me with a net profit of $5,800. Same thing now for shorting. My gross profit for shorting, 7,937. And my gross loss is 2,557. Five, two, sorry, $2,575.78, leaving me with a net profit of 5,361. So hence altogether, I made $11,000. And this is all starting from the ending of July 2019 up until now. Started with $2,100, and I grew that $2,100 to over $11,000 just trading. So now some more statistics. Percent profitable. So I'm actually more profitable buying. So I have a 65% chance of winning every time I buy, and I have a 64% chance of winning. Now my winning trade, so 60, I made 60 winning trades buying, 37 winning shorting. My losses, 31 losing for buying, and 20 losing for shorting. Now this is where the numbers get a little bit more interesting. My average trade net profit is $63.74 when I buy, but my average net profit when I short is $94.07. So average winning trade is about $164.19 when I buy, and $214.53 when I short. My average gain when I buy is 8.95% when I buy, and 10.94% when I short. So that's what I mean. Like my gains when I short tend to be more than when I buy. But since I did more trade buying, that's why that number is there. So even my average loss is higher when I buy, and it's $2 cheaper. My average loss percentage is 5.97%, and my average loss when I lose is 8.52%, which I definitely need to get that down. So my ratio average win to loss is 1.26, and this is incredible, 1.67. So my largest win was $1,500 when I bought, $736. This is how much I made like in one single trade. My largest win was $1,500.10, and my average, my largest win when I shorted was $736. My largest loss was $832 in one trade, and my largest loss when I was shorting is $490. So definitely don't want these puppies to repeat. Largest winner as a gross profit was 15%, and average for that was 9.27%. And largest losers, 20.55%, and 19. So this is my winning streak. Nine straight trades that I won buying, 7 straight trades shorting that I won, and I had 5 back-to-back losing trades when I bought, and 3 losing trades when I shorted. So this is just a breakdown of my stats. You can find this on Profitly. I'll leave a link on the in the description if you do want to follow it. But like I said, short selling, that's my bread and butter. I enjoy it. I like it. I feel more comfortable when I do it versus buying, even though, statistically speaking, I have a higher chance of winning when I do buy. So hope this guide was of value. Like I said, this was just the intro course. For more practical details as far as like what to do, is I think the next step for anyone who's watching this and is serious about trying to trade. It is a process. I'm not gonna say it's easy. Once you get past the initial steps of learning, then that part get easy. But at first, it could seem overwhelming. When I first got into it, didn't know anything. Um, for just studying, and I was able to get it. So it's hard, but it's easy, if that makes sense. It's hard when you don't know what you're doing, but it's easy, and that's anything in life. But yep, this is Vlad signing off before I start rambling more. Hope this was of value to you guys. Any questions, please leave a comment below. Peace.